Hi everyone, welcome back to Be Rich. So, what did I want to talk about today was stock lending and borrowing. A lot of you have been asking this question: what is stock lending and borrowing, and is it safe? Can I do it? It is a good, valid question, especially when you're a value investor. The point of buying something is we buy it and we hold it, and it's just sitting there, and we don't plan to sell it. So it's like you know keeping cash which you can use, do something with that asset, and we do try and maximize the returns on all our assets. So this is a methodology which you can take something which you don't plan to sell in the near future, and you can leverage it and make some money off it by letting someone borrow it from you, and you continue being the owner. So stock lending and borrowing, or SLB is it referred to, is a system which allows people to borrow and lend shares for a specific time period. This is allowed legally. It is regulated under SEBI, and it's facilitated through the National Securities Clearing Corporation Limited, NSCCL, which is part of the stock exchange as well as the Bombay Stock Exchange. So, why did they do this? It is to make sure there's market liquidity. What is market liquidity? Market liquidity is the number of stocks floating around. Otherwise, what will happen is a lot of people, like what's happening in Bitcoin, they'll buy huge chunks of shares of a very good company and be sitting in their bank locker and never getting out. And because they just want to hold on to it, which a lot of value investors can do. This way, it allows more liquidity to enter the market and helps you to settle the securities that are sold short. But here are the key features. I thought I'll walk through them so you know what it is. Who are the participants in this? There are both retail and institutional investors can participate in SLB, securities lending and borrowing mechanism. Institutional investors are the ones who favor this because they often lend out their idle securities to earn extra income. Institutional investors, they usually have vast quantities of shares and they don't mind lending it out because the way their setup is, they're not supposed to be selling it anyways. So instead of it just sitting there in their bank, in their what you call demat account, they lend it out and they can make some extra cash on this. While traders and institutions are looking for to short sell and hedge their position, they can also borrow the securities for this. So while traders are also looking and institutional investors are also looking to do short selling and all that, they can borrow these securities to cover the securities. So let's say when you're shorting a stock and you need to return it, and because the market is turning the other direction, you can use SLB to borrow some shares and settle your positions, and the cost might be more reasonable when it's an SLB, depending on the calculation. So you have to see this and work it out. I'm not recommending that you do trading. I'm only talking purely in the person of a retail investor. I have a lot of shares. Sir, can I lend it out? Yes, you can lend it out. It's completely legal and it's completely safe. The borrowers are required to provide collateral in the form of cash or bank guarantees. This is where your security is there, or government securities. So your stocks, when you're giving it to someone, you're getting something in return to hold on to, which is cash, bank guarantees, or government-backed securities. And the value of the collateral is typically higher than the value of the borrowed stock to cover market risks. That means, let's say a stock is valued at 100 rupees, as a purely example. I'm not saying the actual numbers. Is 100 rupees a share is, you will get a guarantee of 110 rupees, 112 rupees to cover. Some breathing room is there, some wiggle room is there, so you feel more secure lending out your stock. The tenure is usually minimum for 1 month, but exact tenure depends on the agreement reached between the borrower and the lender. And this facility is done through the exchange mechanism, right? So the whole thing runs through the stock exchange, and usually it's a 1 month, it's the shortest. And if you want to lend it out for longer periods of time, you can, depending on who's borrowing it from you and what you feel comfortable lending for and how much you're lending it through. Settlement and clearing. The settlement and clearing and the settlement for the SLB's transactions are held by the clearing corporations of each respective exchanges. The NSCCL for NSE and the ICCL in the BSE. They manage the collaterals and make sure the adequate cover is there during the lending period. Now comes to the cost and charges. The borrower pays the fee to the lender, which is determined by the market based on demand and supply for the specific security. So you can make a demand saying that I want to lend it at this. But if everybody else in the market is lending it at a lower level, no one's going to borrow from you. So that's what it means. Market sets the what do you call the lending rate. Depending on amount of people who are willing to lend it, the type of security is, the tenure it is, there's a demand and supply in the market. So you can only go into that. You cannot aspire to say, I'll charge 200% more. Nobody will be there to borrow it. So keep that in mind. And also, doesn't mean if you have a certain security that there'll be someone to borrow it. Not all securities are borrowed. Not like how not all securities are lent. All securities are not borrowed. So you might be having some small cap stock of something or another, and you might want to lend it out, and it might not be borrowed by anybody. So remember that usually these stocks which are in SLB, which are lend and borrowed, are usually high trading, high volume stocks, which has a lot of short and covering happening on that. Those are the stocks which are usually the ones which are floating around the most. Now, what is the risk? You said all this, Vinod, very nice, but what is the risk in all this? Well, the risk in short selling, in hedging, is in terms of the borrower. So much of the risk is on the borrower because he's borrowing it and he should not default. If he defaults on this, then the obligation on the return securities, he gets himself into a lot of trouble. But as a lender, your position is pretty safe. You're covered because it's backed by SEBI and the exchange. So your security will be returned to you in one form or another. But as a borrower, you should be very careful if you are thinking of borrowing on this SLB platform, that like taking a loan. So you are provided to return this. And if you don't, you will be penalized and penalized heavily. So be careful if you are thinking of borrowing on the system. And I would not suggest borrowing. It's like taking a loan. This information is purely for people who are value investors, who I said initially in the beginning, like institutional investors are sitting on large stocks of a certain stock, for them to generate some extra income from it. It's the same ideology, same idea which I'm sharing for retail investors like you and me, who are sitting on some extra shares of a certain company which is being borrowed on heavily. We can lend it out and make some extra cash. There's nothing wrong in it. So this is a brief outlook of it. I've written a more detailed article in my Medium page. Do have a look at it. I'm sure you'll have some more questions. Do reach out to me and I'll try and answer them as best as I can. Thanks for watching the video, guys. And I'll see you in the next one soon. Bye.